All right, now, I don't believe the Trump tax cut hike rumors. I don't believe the Trump tax hike rumors, okay? That's the subject of the riff. Now, yesterday was tax day, which would have been a good time for the White House to put to rest all the rumors of a Republican tax hike. Instead, we got a Bloomberg article entitled "Millionaire Tax Hike Gains Steam as Trump Signals Openness." All right. Now, openness doesn't mean the president would sign on it. Knowing him, he's open to discussing a lot of things that he ultimately rejects. That's why I believe this is something he will ultimately reject. Promises made, promises kept. The promise was made to extend the 2017 tax cuts, which includes keeping the 37% top bracket for earners, and I think that's around $650,000. It also means 3 percentage point cuts roughly down the line for the lower income brackets, a doubling of the standard deduction, a doubling of the kiddie tax credit, a roughly 12% tax rate on foreign income repatriated, a 21% corporate tax rate, and 100% expensing for machinery and equipment. The Bloomberg article suggests the need for higher tax rates as a pay-for. But this doesn't make any sense because Mr. Trump and the House and Senate Republican leaders have all agreed to the current policy baseline, which merely extends the 2017 tax cut and would be deficit neutral. Also, as Mr. Trump knows, the top personal tax rate is paid by small business owners of LLCs or S corps and so forth, which really comprises the bulk of the jobs and income generated in the economy. Small business owners are already concerned about the impact of higher tariffs, so why hit them again with a higher tax bill? Mr. Trump is a champion of small business, always has been. He's also well acquainted with the Laffer curve, as he presented Dr. Laffer with the Presidential Medal of Freedom during his first term. The Laffer curve argues that higher tax rates will generate lower revenues through weaker economic activity and greater tax avoidance. A lot of the wealthy can afford top-flight tax accountants, and they will avoid paying more in taxes. By the way, the top 1% of taxpayers already pay 45% of the income tax, nearly half. And the article goes on to say higher rates on top earners could offset an expanded state and local tax deduction. But that only really impacts high earners. So let me get this right. Trump would penalize high earners in order to reward high earners? Doesn't make any sense. And the president is a common sense kind of guy. Unfortunately, some Treasury officials have been out there talking about how everything is on the table or many, many ideas are being studied to minimize the total cost of the tax bill. But you know what? These Treasury officials would be much better advised to just stick to Trump policy that he intends to extend the highly successful 2017 tax cut bill. Now, Mr. Trump has added some very good tax additions: tax-free tips for service workers, tax-free overtime, tax relief for seniors. He's also added a 15% Made in America corporate tax cut and immediate expensing for factory investment, retroactive to January 20th, 2025. Now, these do fall outside the current policy baseline. But rather than raise taxes to finance tax cuts, why not just tap into either the Elon Musk Doge savings or whatever tariff revenues are being estimated? Mr. Trump has always believed in rewarding success, not punishing it. The kid in the garage, the Main Street small businesswoman, the successful investor should not be penalized for becoming wealthy. Mr. Trump is determined to reprivatize our economy, adding plenty of new dynamism and risk-taking in the process. He's said so a million times. Why would he want to raise taxes on our most successful earner? That's why I do not believe he's going to go for tax hikes. And that is the subject of the riff.